GM guys. GM guys. How am I sounding? Is the sound good? Sound check 1 2 1 2. Sound check 1 million, 2 million, 3 million, 1 billion, 1 billion. All right, guys. So let's begin. I think we're good. I think we are good to go. All right, guys. I think everything is good. The sound is good. Let me test one more time. How am I sounding? Is the sound good? Sound check 1 2 1 2. Sound check 1 million, 2 million, 3 million, 1 billion, 1 billion. All right, guys. So let's begin. I think we're good. Okay, guys. So I'll cancel out the first 4 minutes of this video because of the sound check and the delay that I've just experienced. Okay, so just keep the chat going. I'll be looking at your questions. If you've got any questions, make sure you do type it out on the chat box. I'll be reading them out. If you need any assistance, maybe you need me to maybe go over something that I've obviously explained and you did not understand. All right, so just make sure you type in those questions. Okay, I'll just be reading them for you guys. Okay, let me let the community on Discord know that we are now live. Okay, forward this message to the trading chat and on the announcement chart. I'm live with everyone. Click this link to join. Boom. All right, guys. So today I'm just gonna go through the $1 million model setup that I just okay, there you go. I think they got the message now, did they? Right there. Okay, let me publish this quickly. Boom. There we go. Right. Okay, so right in front of me I have The $1 million bullish reversal scenario. If you're my student, you know what I'm talking about. Okay, you know what I'm talking about. This is exactly what you are experiencing. And what's good about this, the setup or the entry confirmation formed uh, before the opening at 9:30. So this is a pre-market session still. Obviously, the setup formed inside that 8:50 to 9:10 macro. And if you look and you study our, sorry, 9:10 was here, 8:50 was right there. So this is the macro, and then okay, give me 1 second, 1 second. This is 8:50 to 9:10 macro, right? Okay, let's put the sweep inversion. We close above that down close fair value. But the most important thing before all of this is that when we opened at 8:30, we did not because if you look from 7 o'clock, this is 7 o'clock, we had and the relatively equal, we put in this new high here, right there, sorry. We put in that high, dropped aggressively, filled that fair value gap. Okay, initially you'd think, okay, we are anticipating a continuation, okay, to the downside. But now, after we open at 8:30, what do you see? Or just soon before we open, there was actually a setup that you would have taken to premium here. If you look at the bodies, these are relatively equal, and then we sweep them right there. This is pre-market, right? When you sweep these bodies here, and we also go as far as sweeping that low, this is a, a valid change in the state of delivery right there. And this could have been your setup. We could have taken this to in the internal buy side liquidity here, which was the relatively equal highs. This could have been your first setup or your first and last setup. Why am I saying this? Because we had so okay, this is another thing that I must teach you guys. If you have a draw, right? And let's say for me, I don't take anything less than a 2R trade, right? So 2R is the standard for me to participate in a trade, right? If I want to take this as my draw, if this is my draw, I want to take a trade and I'm taking it to these relatively equal highs up in here, right? I want to take it to these highs. And there is a change in bullish market structure shift here. What I want to see is I want to measure and get the discount arrays of this price leg, and I will take the one that's going to allow me to have a 2R. So my stop loss has to be here. This is supposed to be my TP. So I already have this stop loss. I already have the TP, and my entry is now going to be determined by the 2R here. So I'll take anything because actually this trade was valid as soon as we entered that fair value gap right there. That was a valid trade, right? But let's zoom in here. It was a valid trade as soon as we tapped this fair value gap. And but if I'm targeting these highs here, I can't trade this because it's going to give me what I have to have this as my stop loss. And then if I use this as my take profit, I'm getting only a 1R. So I have to wait for the lowest discount entry, which is the last down close candle prior this move to the upside, which could have gotten me something like this, something close to a 3R trade. like that, and this was going to be the setup. And guys, stop forcing a 3R just because you see that it's close to 3R, you're getting a 2.92 and you're like, let me put a 3R. Yeah, sometimes you're not going to get the 3R and it's going to deliver like this and you're going to regret it. So you want to be very strict when it comes to that. This is a very this is like a low-hanging fruit objective. Price could have and went even as far as taking out that high with this move alone before dropping lower. But guess what happened also? What they did with this, this is another thing. Because they did not take out that high, what they did is now they generated buy side liquidity, because after 8:30 when we opened, they only went to take out this internal buy side liquidity here, because the opening at 8:30 was right there. So we only took out this internal premium internal buy side. Why am I saying it's premium? It's premium because it's at premium of this whole entire range here. As you can see, this is our equilibrium. So these relatively equal height for or are at premium. So they generate buy side when they create these smooth edges. And I told the guys on Discord after 9:30 we are going to come back to these highs here, because I could see the drop coming. And unfortunately today I was not trading. Okay, so I was gonna catch these trades on gold. Gold was looking really good today. After that, we open again at 9:30. We take out the pre-market. Sorry, this is 9:30. Yeah. So now 8:30, I'm gonna refer to 8:30 because I'm referring to what happened after 8:30. So this whole time here, I want to study and understand what happened here. We opened, we created, but also with reference to a price action from 7 o'clock, right? If you wanna trade after 9:30, although our calendar suggests that we do not trade. Okay, we had a medium impact news here. So it's you can trade even though you have it's a day before non-farm payroll. If you are cautious enough, you can trade the New York AM session because of the medium impact news that we are going to have, but rely mostly on the macros. And also if they extend it after 8:30, you have that the displacement or extension to be used as a manipulation. You can trade after 9:30 because 9:30 is going to give you that true clean run to the opposite direction of what 8:30 did. So that's exactly what happened here. 8:30 generates buy side and then it runs in the opposite direction of what 9:30 is going to deliver. So that's what manipulation means. So this is like a false drop, and people are gonna try and chase this, and by the time they do, look at the macro time here to confirm there's a reversal put in place just after the macro. This as a 9:10 candle that swept the low. And if on my best day, you'll see me buying this candle as soon as it rejects, because I'm looking at time before price, and I understand that 9:30 has bottomed out. We've taken now this low here, cleared inversion, but also it helps to have a high time frame um, point of view, or maybe some high time frame. Let me do this. It helps to have like a high time frame um, point of view, right? So this is a fair value gap on the 4 hour that we were filling, and after that, you're seeing that at the right time, right? If you're looking at the 1 hour chart, you can see that we had this order block here, and look at the bodies. Body is remaining above the opening price of the order block, so that there's sensitivity there. Okay. Also went as far as reclaiming this buy side here, which was previously traded into, reclaim the high of that right there, and then now it's pumping. So these things all together, they help you Or maybe if you want to check the 15 minutes, we had clean red sell side liquidity here, purged. We also had this guy here. Look at the body. So this is a reclaimed BC right there. The bodies are remaining inside actually the upper quadrant of this 15-minute BC. So we are having support, and now we are back at the pre-market range highs. We also have that as a draw. I think this is where we are going. We might even go as far as feeling that fairly gap and taking out that buy side here on gold. But with the smaller time frames alone, also, if you understand my model, and you understand what time before price mean, then you're basically just good to go. Okay, so I don't want to dwell much on today's setup. I want to show you uh, of what looking at the futures for, maybe let's say you want to get like a clear weekly draw or daily draw. Studying the futures markets before you execute on your CFD will will help you understand, or will make you avoid a lot of mistakes. Okay, so I was bearish. I shared my weekly draw on my Discord past couple of days, and I told the guys I'm bearish on gold. I had a very strong bearish bias a few couple of weeks, and I want to show you what I wanted to share with you. Let me open my Excalibur draw, and I actually said, okay, let me not share this. I think it was the date here was what, I don't know, but this is where price was on the daily chart, and now we are trading way above this on the futures chart. So after that bearish bias, I think I had it away. This is very important. I was talking to my students, so you've got the memo now of what I teach these guys. Okay, let's start here. We're gonna go through this again, so I'm just gonna point things out here. It's gonna be way easier for me to do so, you know. All right, guys. So if you look at this weekly chart, this is a weekly chart on gold, and you see the suspension block. Suspension block is a candle with a volume imbalance on either side of it, and we had this sell side liquidity, and that was purged on that day. Okay, unfortunately I can't get the exact date because I'm not on trading view, but we're just gonna look at the candles here. So this is what the CFD chart was showing. Now I'm gonna go to this weekly chart and zoom in and to show you what I was looking at here. So if you look at the if you look at the CFD chart, right? Let's use gray. It's fine. We'll use gray. We'll use gray. Okay, fine. Let's go. Let's do this. Let's put gray. There we go. I had these nice relatively equal lows that I was targeting the whole entire time. Okay, and when price was showing weakness here, I wanted to set until this day. I'm gonna show you what happened on that specific day. But look at this relatively equal lows. If you look at the date here, the suspension block was from the 29th of September, right? Now let's go to this, the futures here, 29th of September. This is the same thing, right? This is the futures chart, right? So now we we actually took out this. We don't have relatively equal lows. That's the first thing. But on the CFD chart, we have relatively equal lows, and we took out that low already, which was the 27th of October 2025 low, right there. Not once, but a couple of times. First time, second time, third time, fourth time, fifth time. Now we are bouncing off of that low, right? Let's go back to the CFD chart. This is a November 27th. It is still not traded back into, right? It's not just this broker here. We can go to a different broker as well. Many other brokers. You can see that we still haven't made it to these levels, right? Okay, on this one, this is Tickmill. Tickmill is showing something different. I did not notice this, but I see that even the volume imbalance on Tickmill is pretty much crazy. At least you don't have those relatively equal lows, but still we haven't made it to the suspension block like how we did on the futures, right? So these brokers, they don't show you the real market, which is the futures market. The futures market is the real market. It's a gentleman's market. That's why you are able to use tight stop loss and not get trailed out. This CFD brokers, they hide information, and they fool you like that. So if you are going to be using the hard time frames, I advise all of you guys to rely on the futures market to refer and check if what you are aiming for on the CFD side is also something that you would aim on the using, I mean, on the futures. Okay, after that, I noticed something, right? So let's go to the daily chart. Okay, so as price was kept on going lower and lower and lower, because I did not have these levels here initially on the futures. I thought it was the same. I did not check myself. I made that mistake to see if these levels are the same on CFD and futures, right? Normally I would do that, but I was like, it is so clear to me that we are still selling because we haven't made it to um, you haven't made it to these levels, okay, that I called out on Discord. I had already called out on Discord. So I was still bearish because I was looking at how price was retracing and rejecting from the order blocks, and then we went lower, pretty much closing below the opening prices right there. But then we would come back above the last down close candle like that. And I was like, okay, I see the resistance, because even actually this is when I started kind of not having that confidence to keep selling when price closed this on this day. It was Friday last week, right? I was like, okay, I don't think we're going to be uh, continue going low. And then I started looking at this, and then I think this is where I started screenshotting this last week Friday, so that now we are going to go through that screenshot, and I want to show you guys what I noticed on that day when I screenshotted these things here. So this is the Friday I'm talking about. I think this is the Friday or Monday, I don't know, but yeah, I think this is the last screenshot. So I want to show you guys what I noticed on that day. So if you understand the um, advanced bearish reversal scenario and advanced bullish, whatever advanced scenarios of my $1 million model, we use these um, bodies sometimes to confirm if liquidity has been purged, like the bulk or the majority of the volume, so that we can have the confidence to execute, or the confirmation to execute, or to get an entry. Okay, I want you guys to focus on two things here: the wicks and the bodies. Okay, after price already referred to these levels, which were previously my draw the targets that I wanted. I mean my points of interest, right? So after realizing that, okay, we've already taken out the sell side that I was aiming for on the CFD side, and after we filled this suspension, we've also referred to the suspension block here. I was watching for maybe a change in it. I was looking for a change in the state of delivery or some sort of bullish market structure shift to show that on a daily or on a daily time frame, so that I can now switch my bias and lean towards the upside, right? So we took out that sell side on the from the 27th of October, and then we referred to the suspension block on weekly. And this is what, excuse me, this is what I noticed on the daily. Now, if you just can ignore the wicks here, just look at the bodies. These bodies here, they're forming what, relatively equal lows, and they get swept right here with the body. Now, yes, the wick have already done the damage, but the bodies tell you the story. This is where the majority of the volume of these relatively equal lows was swept, and it did not do that once, but also it did a second time, which is like a three drivers pattern if you include the wicks. But look at the bodies, these are also relatively equal. These are still also relatively equal, but they sweep these lows, and we have something like a one, two, three in terms of the bodies. Ignore the wicks, and then we have a push. Now this push leaves us with what, a change in the state of delivery. Now when price was still because I remember on this day when I had this, I think this was this day, I think it was on this day, I think we had CPI last week, CPI day, and then we had this strong bullish close, and I was like, okay, because we are still kind of respecting this, this is a new week opening gap or new day opening gap somewhere there, and I was like, okay, I think I'm still gonna lean bearish, and the following day we traded, we opened, traded above previous day's closing price, and then we started dropping, which was a premium inside this week, right? And then we closed bearish that day, and the following day I was like kind of bearish still, not kinda, I was bearish still, okay? But we had this another suspension block here, which was respected because you can look at the fair value gap here and think, okay, price went all the way, it respected the CE, but the CE of the suspension block, or the main threshold of the suspension block, is way lower than the CE of just this fair value gap. So you include the whole thing. You don't just look at the fair value gap in a case like, it's the same as when I outlined this gray rectangle, which was the weekly suspension. It's the same thing here. So if you look here, we have a volume imbalance. So you include the whole thing. So the main threshold comes is somewhere here. So you look at the bodies here, respecting that, and that's what I was noticing. And remember, looking at the bodies here, you can tell that okay, now we are going to have this relatively equalized as the draw, and also this week high as the displacement candle high. So that was like a short-term draw. So that's why I had this. I wanted to share this with the community, but I think let's do the following day. Also, this is like the same chart without the weeks. Relatively equal lows purged, and we have relatively equal highs across the board here. I think this is where, and then the week is here, so that's the draw. But this is like a majority of the, this is where majority of the volume sits, and that's why I had this. I had already switched my bias to, okay, leaning more towards the upside because of the screenshots that I already taken. But I was lazy to share these guys, and also I think there was a day where we had a strong bearish day, and I was like, okay, maybe I'm wrong. Let me not change it yet. Let me not tell you that I'm kind of, you know, because I don't want you guys getting mixed emotions and whatnot. That's why I just shy away from sharing my bias, because I know some of you can, that would lead to some of you risking so much money just because Aikido called a bearish week, and now you just selling every day looking for sells, which is, you could lose a lot of money, because I would get these things wrong sometimes. But I like to, have that deeper understanding of price from the high time frame perspective, so I can know which side of the market I want to, de-risk, and maybe use majority of my, risk more on. So if I'm bearish for the week, then obviously if I get sales using my model, I'm going to risk a little bit more, because that's why I'm going to get that, the majority of the profits, because maybe I might get the biggest range in that direction of the day of the week. So in this case, this is where this was a bit detailed, but if you were using the same detail, sometimes we are using the same method of price action or analysis to confirm if we are going to have like a reversal or a continuation of the $1 million model. So you need to understand the bodies, not just the weeks, for liquidity sweep. And if you understand it like how I'm showing you guys, you are going to get far with this model. So I just want to keep it here, and then after that, look at what happened here. So I'm going to go back to the futures chart so you can see what transpired after price respected the suspension block, right? here on the daily, right? So if you look at the suspension block, this is the suspension block. Yes, we did have a day on this day where we closed below the main threshold, which is the midpoint of this whole thing. And we respected it on these first 2 days when we traded back inside it and we closed above it. Then we came back. So on this day, this is where I was supposed to share the screenshots, and I was like, okay, maybe I'm wrong, maybe you're still bearish, but I am kind of leaning bullish. Okay. And then this was a Wednesday, low of the week. We swept that Tuesday's low, and then we punch higher. We come back to Friday, we close very close to a Wednesday's low, right? And then, but we do not, the port, I mean, we do not close below that. We make a low of the day, which was below Wednesday's opening price. And then we close above Thursday's price. So this is where, if I was pro bullish, like if I was bullish, this is where I was supposed to, you know, on Monday, I was supposed to have that idea and actually execute on it, but I did not. Even on yesterday, even yesterday, I did not execute on gold because when I woke up, it was just already pushing and it was approaching these levels. Okay, so the first draw was this high, and then the second draw was this high. But look at how we closed yesterday. I did not expect price to close above this. I thought maybe if they push, if they are very aggressive, they can push above this high and maybe try and weak this and close back inside the range if we are still bearish. But this is looking now really bullish, and we might, go as far as taking out that high inside this imbalance. We'll see what the next few weeks have in store for us, but this is what I noticed, and I did not share this with you guys. For some reason, I was just like, let me not share it, because it's like it became a 50-50 scenario on one of these days when it kept on coming back inside, closing at the lower quadrant of this suspension block. I kind of leaned more towards, I became neutral with my bias basically. But I did say it on my live streams, just that I did not send a detailed review for anyone who couldn't attend the live sessions that I had during the week. So that's what I wanted to cover today, guys. I hope this was very insightful. And if you've got any questions, you can just type them out, and you do let me know on that. So Bitcoin is still kind of stuck in a range here, so I'm also not giving it too much of my attention. Still stuck in this range here, moving sideways. I think a breakout is also imminent, but to which side, I really don't want to stress about that. So I'll just be watching, because to me it's also kind of 50, it's a 50-50 scenario in Bitcoin as well at the moment. At least I'm not even paying that much attention to it, to be honest. I'm just letting it do its thing, and I'll see it whenever it's ready to pick a side. All right, so I'm not going to dwell much on today's live stream, guys. I wanted to just give you that insight on how do you use these if you are going to be having a long-term perspective on the market, or if you're going to want to have that long-term, um, maybe like you want to swing trade gold, or you want to do this, you want to do that, just make sure that you refer mostly to the futures market, because that's the real market, not the CFD market. I just showed you how these things could fool you sometimes. So very important, guys. That's what I do as well, and now today you got to see the real reason why. And if you follow that, you're going to save yourself from a lot of losses, unnecessary losses at that. So yeah, I'll see you guys on the next video. I hope this one was insightful, and if it was, you know click the like button there. That's how I know that you guys enjoyed the content. Just hit the like button, leave a comment, and I will see you guys on Discord. If you just joined, please make sure you rewatch the whole video. I just shared some very important things when it comes to reading price action, and you need this in your career, guys. It's gonna make you a lot of money. All right, see you guys on Discord. Let me know how the session was there, and yeah, I'll see you there. Cheers.